I ran out of coffee. This better be an exciting financial report. Good morning. It's 8:41 at Your Light FM. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time. Check in and find out what's going on Wall Street and what's happening to your money today. Yesterday was a pretty good day, but we got a whole bunch of junk on the horizon that can mess with it. Let's check in with Philip Statler from Statler Financial Services and find his beat on the markets this morning. Philip, good morning. How are you?
Hey, good morning, Dave. Doing well today, other than it's just a little chilly outside.
Just a tinge. I was celebrating the fact that Avon Park peaked over 40 degrees about a half an hour ago, and Sebring is right on its heels. It's going to be that way for the next 7 days, though. I hate to say it, and my hunch was that while everybody was 20 below zero yesterday, the amateurs got involved on the market. I also noticed that my fear and greed index, that thing that kind of measures the amateur investment attitude, it's back into the greed range again. So we're starting to feel halfway optimistic. Bad news is that probably means the institutional buyers are about ready to sell off or something, doesn't it?
Well, yeah, it's hard to say. It is. I mean, we did have a good day yesterday. I mean, we can't, short that at all. And it was, I mean, other than the Russell struggled a little bit yesterday getting going, but I think a lot of it could have been, we do have some of the tech companies are reporting later this week. And some of them got a little bit of a push by some of their, analysts that things are looking pretty good. So that could have helped, like the NASDAQ and the S&P 500. I think the Dow probably got helped, by the likes of GM getting ready to report and Boeing, some optimism there could have helped that as well. So
by and large, it wasn't a bad day at all. After 2 down weeks for the market, I mean, we've had 2 consecutive generally down weeks now for the marketplace itself. I mean, the S&P was up by about 0.5%. The Dow was up 314 points, up 0.6%, and the NASDAQ gained a little over 0.4%. You mentioned that the Russell was down. It was down by almost 0.5% yesterday. But on balance, especially when you take the capital that actually got infused into the market, it was a pretty good day. I don't know whether the money came out of gold. I noticed that gold actually went down by a couple hundredths of a percent, but gosh, it's still over $5,000 an ounce. We just crossed 4,000 just 3 months ago. That's a skyrocket.
It is, Dave. It's just crazy. And silver is just going out of the roof as well. I mean, it's down this morning from the close, but golly gee willikers, it's like it's right now at 111. Who'd ever thought that we'd see silver at $111, and that's down $4.25, which means it was over 115 at the close.
Yep. The open market can do what Bunky Hunt and his brother couldn't do 20 years ago. We actually cornered the market on silver, and we don't even know why, right?
That's right. Doesn't seem to have any rhyme or reason right now.
Absolutely. Whole bunch of stuff going on today. It's the first day of the Federal Reserve's Open Market Committee meeting, and nobody expects any changes, but I got a sneaking hunch about 2 o'clock tomorrow afternoon, we're going to be parsing every single syllable Jay Powell says when he has his press conference, because not only are we not expecting any interest rate change, we don't know what their instincts are going to be this time because we got some changes in votes on the Open Market Committee. So the action won't be exciting at all, assuming they don't do anything that we don't expect. But we're going to kind of get a picture from what Powell says as far as what the future holds, because they were saying at the end of the year not to expect more than one interest rate cut all darned year during 2026, which didn't help the mood of the market one tiny little bit at the time. But, hey, new board, new membership, new votes. Let's see who's arguing this time around. It ought to be an interesting press conference. Wouldn't you agree?
I think so, Dave. The other thing I saw some headlines on is that there's some economists and analysts that really say that the most we're going to see before it stops, before lowering stops, is two more interest rate cuts. Now, whether that happens this year or we get one this year and one next year, that we don't know. But there seems to be some consensus now that we're going to be two and done for a long time.
And actually, that would get us back down to what they used to call normalized rates, but we got spoiled by close to zero for so doggone long. 3.25%. That would be normal back a few years ago, and actually somewhat stimulative. But compared to what we've had for the last few years, as we've weathered the COVID pandemic and the Great Recession of the 08-09 period, 3.25 sounds like an absurdly high interest rate. But we got to keep perspective in there. That's pretty close to historic norms, and it's neither restrictive nor stimulative. So really, while we may be disappointed by a maximum of 2, it really isn't that far off of the norm.
No, it won't be. And that's, we got spoiled, like you said, over that time period. So, getting them back to that normal range, I don't think President Trump's going to be happy about it, but I think from an economic standpoint, that's probably where we need to land.
In all probability. Other tidbits that are out today, you mentioned some of the tech stocks going to be reporting midweek, a whole pile of them coming out tomorrow. Well, some of the excitement might have come off from something Microsoft said yesterday. They're the latest one of the big players to debut their own artificial intelligence chip, taking on Google, Amazon, NVIDIA. They're calling it the Maya 200, and it's going to run their own data centers before anybody else is going to have a taste of it. But there's a whole lot of the big companies are saying, oh, heck, we're going to make our own chips if NVIDIA is going to gouge us for the price. Kind of makes the market interesting, doesn't it?
It will, and it'll be interesting to see how it affects NVIDIA as well. Hey, the other thing that I want to talk about a little bit here is a little tidbit, Pinterest.
Mm-hmm.
We're starting to see layoffs from different companies, and Pinterest is laying off up to 15% of their workforce, which I saw somewhere was in the neighborhood worldwide of like 4,500, but knocking off about 15% of them and reducing their footprint. In other words, reducing their office space as well, reallocating those resources to roles and teams that are focused on, guess what? Artificial intelligence. And so they're seeing that they can make some changes, reduce the footprint, and reduce their workforce to do that. Now, it's not helping them this morning. They're trading down about 3.25%.
Oops, sorry, my microphone fell down there for a second. I'm holding it up. There we go. Other tidbits out there before we get into probably at least a 350-pound gorilla in the room, government shutdown. One of the stocks that went up heavily yesterday was a company called USA Rare Earth. Why? Because the government bought into it. We bought a 20% share of a rare earth company, which I find kind of interesting, but probably not a bad strategic decision.
No. Hey, on the healthcare front, United Healthcare, Humana, CVS Health getting beat up big this morning on the announcement that the Center for Medicare and Medicaid Services released their proposed raise for the.
You there?
To only go up. I gotta get this right.
Hello?
I think this in my head. 0.09%. Less than 0.1%. They expect that increase to go. Which has all those.
We lost you for a couple of seconds.
Okay.
What was the 0.9% increase in?
That's in the 2027 Medicare Advantage plan payment rates, which has got United Healthcare down almost 16%, Humana down almost 17%, and CVS down about 10%.
And doctors probably inventing new cuss words, right?
Well, now this is only the Advantage plans. Right. So it's the money that gets paid to the insurance companies.
Oh,
because the Advantage
that would ruin
plan,
an insurance cut.
Yeah, the Advantage plans takes people off of Medicare and shifts them to the insurance company's liability And in exchange for that, the insurance companies get payments from the government to cover those folks.
Okay, that was the part we kind of had a little cutout there. I wasn't clarifying exactly what that mediocre increase was. That probably didn't help the insurance company's executive suite, Sonny. The other tidbit out there, as I called it, the 350-pound gorilla, might not be 500 pounds because we got some junk passed, and I'm not sure the politicians have the gonads to do it. But the 31st of this month, we've got the potential of another government shutdown. This time the Democrats want to defund ICE in addition to bring back the Obamacare subsidies. This is going to be an interesting argument for the next 5 days.
It is. And, if we shut down again, I just can't imagine the impact that's going to have, along with the winter storm we're dealing with right now.
Yeah, that's another deleterious impact on the economy. We've got a lot to watch this week. Among others, a really heavy schedule on earnings reports, and a couple of the big household names have already given us some information. One of them notably General Motors. How did they do?
General Motors, they kind of had a mixed quarter, actually, Dave. They did a couple things. One, they had, well, let's see, they have strong financial performance in 2026. That's what they think is going to happen. That's their guidance. They announced a 20% increase in their quarterly dividend payment and a new share buyback program where they're going to buy back $6 billion worth of their own stock. Now, here's the deal. They kind of had a mixed quarter. They beat on earnings. They missed on revenue.
Mm-hmm. I know they took a great big charge off on EV production when they decided to cut that back, $7.5 billion.
Yeah, I think a lot of companies ended up that way. But it's got General Motors trading up today about 4.6%.
Cool. I know Boeing was one of the stars of the thing on the Dow yesterday. It probably explains part of why the Dow did so doggone well. They had a big sales increase, and did they beat on the macros as well?
So it's a little hard to tell. I put up, yes, they did beat, but how much is a little, they're not comparing apples to apples right now. They earned $9.92 adjusted. And here's where this big of a gap just doesn't exist. They were expected to lose 39 cents. So the report says, I don't think these things are actually comparable. But that being said, they did do better than expected. And revenue was ahead of expectations as well. They are still trading down this morning, about almost 1.8%.
I think somebody's bullcrap detector's going off on that, just like yours and mine are, right?
Exactly. Hey, another big company that reported, American Airlines. We talked about them, I think, last week a little bit because they came out with some projected numbers expecting 2026 to be one of their best revenue years yet. And they're still there. They expect revenue growth in 2026 to be somewhere in the 7 to 10% range, which is a huge number for revenue growth. So they're moving up this morning, up almost 3.5%.
Cool. Let's do one more, shall we?
All right, so let's do something close to home. Nucor reported, had a little bit of a disappointment in their earnings report. They missed their earnings per share, came in at $1.73. Expectations was $1.89. Revenue missed as well, and so they're down about 2.25% this morning.
Well, shucks. Resetting the table, it was a generally up day for everything except for the small growth stocks yesterday. 45 minutes before we open this morning, what are we looking at?
So we're looking at a mixed bag right now. The Dow is in the red, almost 0.7%. The S&P 500 is up 0.25%. The NASDAQ 100 is up almost 0.6%. Flat right now.
You there?
Yep. Are you there? Can you hear me?
Okay. Yep.
All right.
Can now. Lost you for a second.
So silver down about 3%, but it's at $112.14 an ounce right now. Gold's down about 0.1%. It's trading at $5,115 an ounce. Crude oil's up 2 days, 1.8% to $61.74 a barrel.
God, we got to settle Iran quick. I don't like the trend on crude oil. Overseas markets, the Asian Rim market was in pretty good humor at the close at 6 a.m. Both mainland Chinese indexes were up. Everybody else was as well. Europe, on the other hand, well, they're mixed, but they're up. By and large, the German markets are off by a tinge, but everybody else is in the green, meaning the European indexes on average up a little over 0.5% halfway through their trading day today. Getting my retirement plans together, well, okay, fine. I'm going to sell Grandma's silver. That'll get me through a little bit. But for the rest of my retirement, I need your eyes. How do I find you to get them on the case?
David, give us a call at 863-382-0037. You know, it's the first of the year. Now's the time to make sure that your retirement plans are going to really produce the retirement you always dreamed of. So give us a call and let's walk through that to make sure you are on track. And then check us out, the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And newstalk730am.com, because we love our computers here. Pay good money for that streaming. I'm going to advertise it. See you tomorrow, my friend. Enjoy.
All right. Have a good day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking again tomorrow. Join us then. Bye now.